Hello, everyone. Welcome. I'm going to give everyone a minute just to virtually shuffle in. My name is Alana O'Connell. I am the marketing manager here at Holistiplan, and I'm so glad that you're joining us today for the first session in a four-part series, Cooking Up a Streamlined Year-End Tax Planning Process. Today's session, Mise en place, preparing for a smooth year-end season, is all about getting your tax kitchen set up for success. We're going to be talking about organizing your client data, configuring Holistiplan for clean, consistent inputs, and setting the stage for clear, confident year-end conversations. A few quick housekeeping notes. We are recording today's session, and we will share that recording with you later this week. If you have questions, feel free to drop them in that Q&A box throughout today's session. We'll keep an eye on that as we go. I am thrilled to be joined by Emily Rassam here today. Emily is a partner and senior financial planner at Archer Investment Management, serving 220 households nationwide. With over 18 years of experience, Emily specializes in helping tech professionals and pre-retirees make confident financial decisions that balance today's priorities with tomorrow's goals. She has been recognized as an Investopedia Top 100 Financial Advisor, a Forbes Top Women Advisor, and an Investment News 40 Under 40 Rising Star. And she serves as a thought leader and speaker for Holistiplan, where she helps advisors strengthen their tax and estate planning strategies. With that, let's dive in. Emily, I'll hand it over to you.
Yeah, I am so excited to be here for this series. I think when we first started thinking about year-end tax planning, we're going to put, I think, one session together. I'm like, oh, okay, we need two. No, we need three. I think we need four because there's so much to talk about. And so for today, we're really going to be talking about that getting ready for a really successful season. We're right in the throes of it right now in my practice. We've done quite a few of our tax prep sessions for the year. So I'll kind of share throughout the presentation today a little bit about how that's gone. And then I'm going to dive into some of the additional preparation we're doing before year end and some of the opportunities. So this is my favorite time of year. If you also love tax planning, this is hopefully an opportunity for you too to maybe enhance what you are doing, get prepared to spend the remainder of this year really adding this massive value for your clients. So I'm going to share my slide deck here. We're going to jump right in. Okay, Lana, that looks good, huh? Okay, mise en place, which I think you actually taught me how to pronounce it a little bit better. I was going to say mise en place, I think en place. Lana already introduced me. Thank you for doing that. One thing I wanted to just add is just my team structure. So that's some of the question that I get when we talk about getting organized, having workflows, having tasks, who does what. Structure of my team. So we're really a team of 6.25 people, 2 advisors. So my business partner, Richard, and I, we have 2 planners. So ultimately handling a lot of things that maybe you have somebody in your team that might be a paraplanner or a planner that helps in a supporting way with your practice. We have an operations manager and a CSA. So there are different times that different individuals on the team step in. This is a big opportunity for you if you have support on your team, or if you're thinking about adding a support person, thinking about what are all of the things that they can do to help you get set up. So thinking of it as your sous chefs or people who can help support getting all of those little pieces together. I have in front of me my favorite little prep bowls. Please go buy some for yourself too if you don't already have them. I think I got these for $1 each at the Asian market near my house. But just being able to put my little ingredients in here when I'm cooking. But can other people do that prep for you? So when you're cooking, can other people chop the veggies while you are prepping other ingredients? Or can all of that be ready where you walk into the kitchen and all of your ingredients are ready to go and then you're there, you're the chef? So if you're in that role, so you're in that chef role, you're an advisor, you are client facing, you are having that conversation with your clients every year to help prepare for a smooth year end. What are all the things that you ultimately need to do, and what are things that you can delegate to others? I am a huge, huge fan of workflows. I feel that allows you to then delegate to those other individuals things that they can do for you. So can someone else on your team request the prior year tax return or help start to stage out the Holistiplan scenario analysis or other tools that we're going to look at? So what do you need to do? What do they need to do? If you're here in a supporting role, what can you take on that will help make your team have the most productive and streamlined year-end process? So thinking about your team structure, just wanted to share ours so you have a little bit of an idea around that. So about this series, we like to pick fun themes here. I wish I was talented enough, like a TikTok star that can cook and talk at the same time, but that's not part of my skill set. So we're just going to talk here. But I do like to cook. So what we're going to do today, we're getting everything ready. We're getting all of our ingredients prepped. We're thinking about how do we make this process smooth. And what I'll tell you is this mise en place for tax planning this year will make you significantly faster at creating a great process for next year. So I always think about anything that you can template out. So a letter that you template out to clients or to the client's CPA, a process that you can create with a workflow step now becomes a repeatable process. So when you go into tax planning season next year, you have a workflow ready to go and you already know what to do and who's going to do which part. It just makes it that much easier. So just like a seasoned chef will have their favorite recipes that they've cooked over and over and over again, it just gets easier. You already know what to look for when certain things are done. When the oil is ready for you to throw the vegetables in the pan, those types of steps get easier each time you do that every single year. So my process has evolved over time. So I've been an advisor in some capacity for almost 19 years, and my practice didn't look anything like this a decade ago. So every single year I think about how do I make this a little bit easier and a little bit better? What can I improve upon with this recipe? How do I make this better and easier and faster to prepare? Because these are, for some of your practices, some additional steps, additional services that you're providing. We get this service creep that happens. So what can we do to make that better? So we're going to focus on that today in part one. Part two, so the next session coming up, we will have time to cook. So this is when we're actually going to really dig into the Holistiplan tool, scenario analysis. I'm going to take you through kind of what a live client meeting will look like with some examples. So live client scenarios. I'm going to take you right into the tools to do all of that. So today we're getting our ingredients together. Part two and part three, we're going to cook. And in part three, I'm going to give you some of the kind of quirky scenarios, edge cases, some of the different recipes. And actually, Holistiplan calls them recipes too. If you've ever been in scenario analysis on the sidebar, there's a whole recipe area where it'll give you the steps to input certain types of strategies. So I'm going to show you what that looks like as well. And we'll take you through real client examples. I'm going to give you some of those different ideas of what I've done with clients this year and how that meeting actually went. So what did I say to them in the meeting? How did they react? And what did we do before year end in order to impact change? And then how did we give ourselves credit for that work? So how did we record that we made these moves that saved these taxes, that made the client happy? And how do we remind the client of that continuously throughout our relationship? Part four is finishing touches. So what do we do at the end of tax planning season right now? The biggest thing we're going to get into in part four is staging the tax letter. So if you're not already using that, the tax letter is a tool that you'll be able to then send a summary to the CPA about all the activity for the year. The best time to do that is right when you're in the thick of that data. So while you are going through this season, at the end of that workflow, you're going to see that one of my steps is to stage that tax letter. We don't send them out until February, but we like to get a lot of that ready. So this is really preparing again for that next step, which is going to be coming up. So that'll be in part four. Each of the next three sessions should have CFP CE credit because they'll have some more technical content. So we can be able to potentially add some of that continuing education opportunity for those as well. So make sure as soon as the registration link goes out for part 2, 3, and 4, get registered, get that CE credit as well for those sessions that will be coming up. So excited to dig in with those. So today we're going to talk about why does it matter? Why do we want to prepare for this season? Why do we want to go through this process at all? So why do we want to have a year-end tax prep with our clients or tax projection? So we're going to go through a checklist of just some different ideas of what we think we need to do this time of year to help support that process with our clients. We want to set up Holistiplan ahead of time. I take my clients, you'll see this in part 2 and 3, I take my clients right into scenario analysis. So what am I doing now to be able to do that in my tax planning meeting with my clients? How do we segment clients? So how do we kind of segregate the clients out, maybe by service level or by strategy? So I'll show you how I tag clients in different ways. We're going to prepare for those reviews. So what do we do internally in order to get ready for that meeting? And then how do we stage that internally? So how do we just get all those steps all together? So that's really what we're digging into today. And I think this is all critically important. I think my episode comes out tomorrow, maybe, or maybe next Wednesday for Human Side of Money with Brendan Fraser, where I talk about everything that I do in my practice. But the one question he asked me at the end is, what do I think is the most important thing? What would be my legacy in this industry? And I think that ultimately being able to help people have better processes and better workflows, I think is the foundation to then throw all of your technical skills on top of it. But having those solid workflows, I will die on this hill. This is where I live. I love this space. And I think that being a better advisor, being able to scale and service more clients in a way that they deserve involves this preparation process. So why do we want to do this specifically? So why do we want to have kind of a fall or year-end tax planning meeting? So we want to avoid surprises on April 15th. I just had a meeting with a client last week. I think it was one of my LinkedIn posts for last week about how they said to me, the very first thing they said to me in our tax planning meeting was, the April tax bill still stings, is what they told me in the meeting. They had to write a check for $30,000. The biggest reason for that, and they were brand new clients, they each had separate incomes and they didn't withhold enough, but she specifically had two separate places she was receiving income. Neither one was withholding enough. So we helped them adjust their withholding, but we just did a tax planning meeting for them where we showed, again, we're going to have kind of a larger tax bill, another $35,000 owed April 15th if things continue on the way that they are. So I don't love being the bearer of bad news, but they were relieved to know it wasn't a surprise. They have many months to prepare. We can just provide the distribution. We can increase withholdings before year end. They're making a donor advised fund contribution. They are, because they're charitably inclined, aligned with their values, and they're making an estimated tax payment before January 15th. So those are all things they can do now so that it isn't as large of I keep saying one check to write. I think we all have to send it in electronically now. I think I'm still going to use that though. But they're going to have to write a smaller check in April, and it's not a big surprise. So their satisfaction with their tax planning process certainly has increased now that we've been working together this past year. And it would have been worse if we didn't increase their withholdings. It's a kind of a big surprise stock sale, big bonus, still kind of bumped them up, even though we had done an additional withholding off of their April meeting. So second reason is to add clean data for fresh conversation, fresh perspectives with your clients. So being able to then see the types of things I'm going to have you collect, like year-to-date pay stub information or income information. So when I take a look at those pay stubs for this process, I now have fresh, clean income data, fresh, clean withholding data. I can look at their other benefits. I can see if they're going to max out their 401k by year end and HSA. So it allows you to just look at all of those things fresh. And also to record some of their preferences and understand how they feel about their taxes. So you get a chance to get all of that into your system to help make future interactions better and easier with your clients. So we're going to then adjust those little strategies that add up over time. I think tax planning is a game of inches. It's all about helping our clients with these little strategies here and there. So adding to the right accounts, later distributing from the right accounts in the right years, these even little tax bracket fill up Roth conversions or donor advised fund contributions or capital gain harvesting opportunities. So some of these little strategies along the way, maybe non-deductible IRA contributions, all of these little things, maybe one move in 1 year doesn't make a big impact. But if you do that for a client over a series of decades and years, those are things that will add up. And I will tell you in here at the bottom, right? It's the most important, one of the most important things we do for clients is to help get this right for them, help them reduce their lifetime taxes. Huge value that we can bring. And this is a process that will help us to kind of dial in even a little bit tighter some of those little moves that we can do each year. Fourth bullet point down, avoid those December 28th emails. So if I'm talking to my clients right now about moves to make before year end, I'm not going to get that email on the 28th of, should I do a Roth conversion this year? Or should I do a QCD? So I'm not going to get those emails because we've already talked about it. Happy CPA relationships. So if I'm doing this process this time of year and communicating with the CPA and being proactive, then that's going to help to further that relationship moving forward and collaborate. So I've got some templates in the back about how I communicate with the CPAs moving forward. That's going to be a big part of that session 4 of this process is really that CPA communication, the tax letter process, cluing them in on what we're talking about or even including them in that conversation. So what that looks like. And then, it's just incredibly important. So preparation for a tax planning meeting. So we want to avoid last minute scrambling for data. Many of our clients are able to produce their data right in the meeting. So if you want to do a working meeting inside the scenario analysis tool in Holistiplan, they might be able to kind of grab and gather that info. But if you are prepared for the meeting, if you prepare your clients for the meeting, if you request that data ahead of time, we're not scrambling for data. It also gets them just a little bit more organized for anything else that they might need to do before year end with their CPA or any other professional they work with. Allows us to just build on those processes. So every time I go through the workflow, I ask myself, are there ways we should improve this or make this better for the next meeting that's going to be tomorrow or the next day? So continuing to refine processes and make things more efficient. So creating that relationship with the CPA, value for clients, and then every good meal starts with good prep. So usually you're going to do a better job if you've done a good job preparing for that meeting, for that process. So here's a checklist of things to think about, and you're going to get this slide deck. It's actually already in your resources tab. So in this webinar format, in your resources tab, you have my slide deck as well as the workflows, and I'm going to jump over to that in a moment. But being able to set clients up first. So if you haven't already, you do have a CRM import button. We use Wealthbox, but there are other CRMs that connect as well. You're able to then import any contacts that you would like to. So either a group of contacts, a certain type of contact, or it can even pull just contacts that aren't already in Holistiplan. So getting clients set up there. Segmenting and tagging your clients in your CRM for year-end review. I'm actually going to show you what that looks like. So I'm going to just show you in Wealthbox, every single CRM has the same kind of process. So this isn't a sales pitch for them. It's really more of a process pitch to you of doing this type of process, whether you use Wealthbox, Redtail, or any of the other CRM systems. How do you then use it to your advantage to make your year-end tax planning process better, smoother, easier? You want to start tax prep workflows for each client. I'm going to take you through my workflow, show you step-by-step what we do, and then decide who does what. So who do we assign each of those workflow steps to? How do you potentially divide that all up? So if you're going to do this for a bunch of clients, maybe you do step 1 for everyone, request the data from everybody all at once, or you assign the workflow as you schedule the meetings. Up to you how you like to handle that. Prepare your client communication templates. So setting up templates, I love using the Copilot or ChatGPT for this type of process. So if you're not already using AI to help support your client communications, I strongly recommend doing that. So I actually created inside of Copilot, I have an agent and actually gave it the little Holistiplan logo as part of their little agent. And I have it think with me about Holistiplan specifically, about tax planning specifically. I don't ever feed specific client information into AI tools. I don't feel comfortable with that. I don't want to share any client names or information or specifics. But from a template perspective, what I've done is I've described to my agent, here are the types of communications I'd like to create. Here are all of my processes. So here are all of my steps and what I do now. I'm going to talk you through what my meetings typically look like. What am I missing? What should I include here? What should I send for an email as preparation or an agenda for preparation of that type of meeting? So I'm training it on how do I think about this for year end? I don't know, maybe we can just download the transcripts from this series of 4 meetings and download that into your AI agent as well. So if you aren't already using AI in this capacity, I'd like to set up different agents that think through different things with me. And so they might have different topics where they have a knowledge base where you've uploaded some information like the templates you're currently using, a checklist you're currently using, workflows you're currently using, all of that, and then say, help me make this better, help me polish this up. Or I'm going to kind of spit out to you what I'm trying to get out of this email template to my client, and then I want you to help me come back with with a solution that fits my writing style and what I'm trying to accomplish here. So I have it kind of question me and check me a little bit here too. And if you don't already, setting one up, I don't know, if you want to put in the chat, what's a good name or a fun name for your tax planning support person agent? I don't know. I'd love to hear some good ideas because mine just says Holistiplan agent. So setting up those templates, getting those ready to go, and then storing them in a way that you can then use those templates moving forward in your client communications. It just makes things a lot easier moving forward. Oh, we have one answer. So CP-AI. And the other question, so Greg, it's just a podcast. If you guys are familiar with Human Side of Money, it's a podcast that I think is being released tomorrow, and I'll post about it on LinkedIn. I know you're on there with me too. So gathering information, so the types of information that you need, this is another thing you can have your AI tool help you think through. So, hey, I'm asking my client about their year-to-date income. I know I need to ask about things like their year-to-date pay stub, maybe income they've received from interest or dividends on accounts that we don't manage for them, or capital gains on accounts that we don't manage for them, or any other income sources that they might have. Do they sell rental property? So you can kind of think through with it. These are some things that I know I want to ask about for income. Can you help me come up with a more complete list? What are other types of income sources that maybe a client like mine might have? So it can help you round out some lists in that communication for you. Or other potential deductions, contribution data. So if you knew they were shopping for an electric vehicle before September 30th, did they buy one? Did they qualify for a tax credit? So some of that data, it's good for you to maybe think through with your agent too when you're creating that template. And contribution data. So you will know and you'll be able to see anything if you are managing their portfolios, managing their assets, looking across the different accounts to see what they've done so far. But again, asking them about anything that maybe you don't touch or don't manage, because you might not be able to see all of the activity across all of their accounts. So we want to gather all of that information that's part of the Mise en place, and what we want to have in our little containers are all of those pieces of data for you to then seamlessly input into the scenario analysis tool. And then we'll want to have a process to prep tax letters as well. So we do have a question from Janet. So after a tax return is imported and available in Holistiplan, is there a way to see a PDF of the return line by line summary to confirm accuracy? Thank you. So Janet, I'll show you in scenario analysis. Specifically, you'll be able to see the different components of the tax return. It's not every single line from the tax return. It really extracts certain pieces of information. So both in the tax report and in scenario analysis, those are two places where you can see some highlights from the return to be able to review it. As far as a line-by-line summary, that's something that I kind of checked it when I first started working with Holistiplan. I think I've had the software for 5 years now, but I've found that all of what's been pulled into the different tools within Holistiplan is very accurate. But for you, you might want to check and see, are these things that might repeat, or what are the details? Where did this come from? Checking it a little bit against the scenario analysis might make sense just by looking at the tax return or the transcript, and then looking at the output and scenario analysis. So I'll show you an example of that. Oh, Taxes Pete. Oh, that's cute. That's a cute name for an AI agent. I like it. Okay. So setting it up for success. So this is Janet, where you're uploading the prior year return. So in this case, the 2024 return. Part of why this time of year is important is even the late filers, the people who have filed on extension and even waited all the way to the end here until tomorrow, the 15th, to file by now, or at least by the time you're going to be doing your tax planning meetings with your clients, they'll have filed their 2024 return. It makes it a lot easier to go through a scenario analysis if you have that data and are able to map that over. So we want to maybe identify client-specific triggers. So these are things that I tag people. So actually, I'm going to just take you over and show you what I mean. So client-specific tags. So you should be able to see, this is just my Wealthbox CRM tool. Most systems have a way of tagging clients by strategy. And so what I've done, I just have a sample household here, is anytime there's a strategy that pertains to my client, at the end of a meeting, I'll just add those tags, because then I can click on any one of these tags and see who falls into this area here. So for example, if a client typically will do a backdoor Roth contribution each year, I'll click on that before the deadline and just see if they've made their contribution for this year, or at least make sure that I've considered that. So just in case they haven't scheduled or acted on a tax planning meeting that I may have asked them to participate in, then I can at least send out a communication to say, hey, this is something you've done in the past, something that we've recommended for you to do. This is a strategy that you've deployed. Would you like to make a contribution again this year? And here's how we can help you facilitate that. Or if they have an inherited IRA and they need to take distributions, we do also have a task open for each client that repeats each year that has inherited IRA or RMD needs. But it's also nice to be able to then pull those people into a report. So we do both. I want an open task for each client that has an inherited IRA, and I want to keep notes on it. But then I also want to just have a tag in the system too, so that I know all my clients across the board that have an inherited IRA that might have some distribution strategy. Because, you know, we might be looking at, if they've got a little bit of room on a tax bracket this year, they have an inherited IRA, they've got to get the money out of there by year 10, then it might make sense for us to just take maybe a little bit more out of the IRA proactively at their current bracket versus just assuming that we're going to wait. Or just assuming that we're going to divide it by 10 and take it out equally over 10 years. So having a little bit of strategy around that, or other types of strategies that they might decide to have. Those are some things that you can add different types of tags. We have tons and tons and tons of tags. So we use everything in these different tools to the maximum capability. So another thing that we like to do, and this is just something that might be a little bit extra work, is we like to, once we've extracted the information out of a return, I'll just keep you in Wealthbox for a minute here and show you some things that we do. I have a template here for filling out some tax return analysis, but this also allows some of the other tools that we use to kind of read some of that data. So I have in here, if you're going to create a new note, I have note templates in here, and that can help us with meeting prep or tax return review is one of them. So then I have a template right here. And as we're moving through, there are things, planning opportunities that I want in here as well. I want to kind of know top of mind if they have rental properties, if they're turning a key age, if income changes, if they have dependent care FSA opportunities, if they have HSA contributions that they're making, if they're concerned about IRMA thresholds, things like that too. So those are templates that I like to save in here too. And then I'm going to take you into the workflow that we go into the tax planning deep dive as well. So this is one of the resources that you have. And I'm going to pull up the PDF version of it because it's a little easier to look at than the output from Wealthbox. You can ultimately take these different steps and put them in whatever system that you have. I think I have 29 or 30 steps in this deep dive, and this is really for this specific meeting type. So I have different tax planning steps for a new client coming in. We're doing a financial plan build process for them. This is really that September, October, November, year-end tax planning meeting. So the first step, really, this is our CSA on our team, is scheduling the deep dive meeting. So once it's on the books, we're going to then launch into additional steps. So if we don't already have their tax return for the prior year, we're going to request it. I actually like to look at 2 years worth of returns just to see some differences there too. So we usually have the one already from that prior year, and during the financial plan build process, we ask for the last 2 years worth of returns. So usually I just only need the most recent ones. That's why that step is there too. So we also like to review the meeting notes for tax topics. So we'll go back into our system and look at any preferences that they've shared with us or anything notable. So the client I just mentioned that I met with last week, where they said, hey, this still stings that we had to write this $30,000 check. I will note that just so that next year when I go to meet with them to say, yep, I remember last time when we met, you said it still stung that you had this tax bill. We did a little bit of proactive planning. How did that go for you? How did that feel? Let's do that again. So let's repeat that process so we don't have that kind of surprise or sting that happens for you on April 15th. We want to remind our clients why we're doing this. So we're helping you alleviate that sting or that burn or that issue that might come up here. So we want to review the meeting notes so that we're fresh on that client specific feelings and thoughts about taxes. So we have some clients that are really tax sensitive. So maybe they're in really high income earning years, or they just sold a bunch of stock that was highly appreciated. So I want to know in here, what are some other topics that we've covered in the last 12 to 18 months that are relevant for this conversation, so that I can get an idea from a personality perspective, what's important to them. I also have clients that have done just mega Roth conversions for a number of years in a row. And they're just like, they've got stomachs of steel where they can just say, yep, I'll write a big tax check. I'm fine with that. I want to do these big conversions. And they're just less concerned. Or they might also treat capital gains the same way, to say, well, you got to sell something, you got to sell something. We're going to pay capital gains tax. So we kind of like to test where a client is on that spectrum. So I know going into that meeting, is this something, how sensitive are they? And what might be their tax budget on maybe additional stock sales, or creating additional taxes from doing a Roth conversion? Are we trying to lower taxes this year? You know, if somebody has sold a property, rental property with big capital gains on it, are we trying to loss harvest? Are we trying to lower taxes with donor advised contributions or other deductions, deduction bunching? What are we trying to aim at here? So is there anything that we know that's quirky about the client or quirky about this year? We want to put that into a note to prepare ourselves for who that client is. So reviewing the tax return and utilizing the checklist, that's really just in our stage that's doing this process here. So that when I'm preparing for the client meeting, I can look at it. A lot of this, you can kind of skip this. If you're doing the tax report with Holistiplan, you could really pull the tax report up and pull all of this data from it. But I kind of want to know from a planning perspective, is there anything I need to know? So do I need to know, did they already tell me that they want to switch CPAs, or do they just start working with a new one? Are there other expected life changes or tax planning changes that we already know? I hate to show up to a meeting and maybe not remember or not know something about a client that I should. So that's part of it as well. So we want to run the tax report, drop it into, this just is Right Capital, our planning software. So we like to have a copy of that ready to go. This is also a good opportunity for us to maybe relay information to my partner who does our trading of our portfolios. So we want to be able to put into our trading software if there's a carry forward loss. So sometimes when you're getting that 2024 return, you might already know that if you've done the trading from the previous year, but that's not always the case. So we like to know, do we have carry forward losses that we can work with here? What tax bracket are they in? We actually put that into our trading software as well, and any other noted sensitivities to him in our case for trading purposes. So if you record that in any type of trading software, a lot of them will allow you to put tax planning inputs in there. So that's sometimes useful as well. And we like to do that as part of this planning process, just to say, is all of that data up to date in our trading software while we are touching all of this information as well. So it's a good reset time for that. Some of the checklist items are just to kind of remind us to look at their plan and think through any sale of property, remind them about retaining improvement receipts, talk about the 2 out of 5 year capital gain rules, setting maybe some tasks if they're approaching age 50, or if they're over age 50, to do catch-up contributions, or 55 if it's HSA, or if they're 60 through 63, those super new catch-up contributions. So are they somebody that we need to maybe remind that they have the ability to do that? I also do that each year just by pulling client by age. So at the end of this year, I'm going to pull all the clients that are turning 50 this upcoming year and send them a little bit of a, hey, congratulations on this milestone. Guess what you can do now type of process. So we do that when they reach QCD age, RMD age. Is just reminding them you've met this milestone. There's a whole webinar I've done already on the age-based milestones that's out in the YouTube archives. It's something that will allow you to maybe think about some proactive ways. But in this process, it just allows me to think about that again and touch that again here. So we want to look at, the DCFSA opportunity. So are they potentially utilizing that? Does it make sense to talk about it? It's just reminding clients to talk about that. Some of these types of topics, I like to just put in our newsletter and LinkedIn too, just because we don't always think on a normal review with clients to talk about some of their benefit options through work. So if they have dependent care eligible expenses and they have the ability through work to save into that type of vehicle, just reminding them. I kind of blast it to every client in some ways through newsletter, put it out there on LinkedIn. But then this just reminds me again, okay, is this somebody, maybe they had a job change. So maybe they weren't eligible or didn't have the opportunity to save in a dependent care FSA plan through the prior employer, and maybe they do now. So it just reminds me to ask them about it, and remind them how it works, the use it or lose it nature of those accounts, and making sure they're saving the receipts and submitting for reimbursement, remembering how to use those properly. Another opportunity this time of year to just check and see if they've moved, maybe they are eligible for different property tax exemptions depending on what state they live in. So have they kind of filed for that? What's the timing of it? Do they need to be reminded? How does that look? Do they live in a community property or separate property state? You may know this if you are in person and all of your clients just live in one state. That's easy for you to already know those rules. But I've been fully virtual for the last 5 years. So I have clients now, I think in 24 different states. So this just reminds me to look up some of that type of strategy. So depending on if they're in a separate property state, does it make sense to maybe think about segregating some assets and just setting up that spouse, the younger spouse or the healthier spouse, maybe as a beneficiary. So there's some strategy here. It just allows me the timing to think about this proactively. Because again, these aren't all things that we think about at 2 o'clock on a Tuesday afternoon when we're thinking about our clients. It's just a checklist to remind me to think through that. So if they're approaching kind of the IRMA determination years, where they might fall, are they sensitive to those brackets? Are we trying to maybe plan ahead? So the clients I just mentioned that did monster Roth conversions, they did those for their late 50s, early 60s. And so now she's turning 63 next year, and they have a much lower future Medicare cost projection just because of some of the proactive planning that we've done. And I like to remind them of that all the time because that was a really big win for them. Another thing that's just kind of funky is you might see their interest and dividend income that just kind of comes through traditional investments, but if they have imputed interest, that sometimes doesn't show up until you get the 1099. So if you have a client with a lot of individual bonds, might be something just to look at for their taxable account, if it's something that we need to maybe add to that prep note. So it happens very rarely, maybe, unless it's something you do regularly, but it's just something to add in there. If depending on where they bought the bond and where they sold it, there might be some imputed interest that then gets added to the 1099 as a little bit of a surprise. So we can't tell these were things that actually happened to my clients at some point. I thought, oh, I need to add this to my checklist. I need to get it into the workflow. So we're checking it every single time for every single client. So we want to check against their federal and state tax limits. So we want to look at capital gains brackets, IRMA brackets, federal brackets, just to see where they fall. There's a tool in Holistiplan, Range Calc, that helps with that process, which I'll show you too in this whole series. And then we want to draft, this is really the most important tool that we use, is the scenario analysis. So I will take you in that one today. This is where we're going to spend a lot of time in the next couple sessions. So I have someone on my team prep that up and start to input the data into scenario analysis. So by the time it gets to me, really, we've asked for the information, we've collected the data, we've drafted up some notes, we've put the information to scenario analysis. So whether you're doing that or you are delegating some of those steps, that's where we are in the process right now, is now we're starting to get really ready to cook in this process here too. The other thing we do in our financial planning software is just retest some assumptions. So sometimes clients come to us and initially in their plan delivery, we make a recommendation on whether they should make a Roth or a pre-tax 401k contribution, or maybe they have a mega backdoor Roth contribution available. I like to just test that and just see directionally, are they saving in the right way? Are they putting money into the accounts in the right way from a tax planning perspective? Are they maxing out? So one of my meetings 2 weeks ago, we saw that he had set a contribution percentage rate and it wasn't going to quite get him to the full amount by the end of the year. So just a little bit of a tweak. We just sent him out with a task to say, yep, bump up your contribution rate just a little bit. We want to make sure you get this maxed out before year end. And should they make any IRA contributions? So whether it's some of your clients might have pre-tax IRA contributions available or post-tax IRA non-deductible IRA contributions available. And depending on whether they have a balance at the end of the year, whether or not they can then flip that money over into a backdoor Roth contribution. So should they do that? It's something I evaluate ahead of that meeting. Have they made contributions already this year? Do we need to think about that? I don't love to make backdoor Roth contributions in the beginning of the year because you may have had this happen before. And in one of my advisor chat group things. An XY planning group has 6,000 advisors on it. One of them, I think just a few weeks ago, said, guys, it happened to me. Like, what do I do now? I had a client do a backdoor Roth contribution, and then later in the year, they changed jobs and their 401k came into an IRA. And now on December 31st, we're going to have an IRA balance. So how do I get this money back out of the Roth? Well, you can't. Like, that's already done, right? So things change throughout the year, and it's not always something that kind of gets triggered in our brains or in our system. So if we do backdoor Roth contributions in January, sometimes things happen throughout the year and we end up with a balance in an IRA at year end. And so that's something that I like to wait until now. So we kind of know already what to expect between now and the end of the year, how that might look. So those are some things we might think about later in the year purposely. So looking at Roth conversion opportunities, maxing out HSA contributions. This is also an opportunity to educate clients on whether they should accumulate money in that bucket longer term versus using it each year, saving receipts indefinitely, investing those balances. So this just reminds me to say, okay, they might be doing that recommendation of maxing that out. That's great, but do they know how to then use it? A lot of times these aren't investment vehicles that we can manage depending on where they sit. So it might be just kind of poking them and saying, hey, have you just accumulated a bunch of cash in the cash side of your HSA? And now it's time to maybe throw some of that over to the investment side. Are you saving your receipts? Are you thinking about this as a long-term vehicle? It just is a re-education opportunity. I like to look at giving goals as well. So either if it's giving to family members, I mean, how many of you have clients that don't understand how this works? I have that question so frequently about, well, I don't want to have to pay tax on this gift that I'm receiving or giving, right? So it's re-educating our clients on how gifting actually works, how the lifetime exemptions work. It's just a really good opportunity to help your client understand how that all works. And then if they're charitably inclined, maybe modeling that for them too. So there's some tools to allow you to do that in Holistiplan with the Donor Advised Fund Explainer. There are different tools in there that'll help to explain that and model that for clients. But in the scenario analysis tool, we can then actually plug that in. So what would an impact of a $20,000 or $50,000 donor advised fund contribution, what does that actually look like in your 2025 projection? And what might we want to do before year end? If it is a big income year and you are going to itemize, so let's say you are doing a donor advised fund contribution. Well, what else can we throw into this year? So we already know that this is maybe going to be a year we're going to itemize. What else can we throw into this year that might be more impactful than next year? So I love looking at the tax projections for those clients that kind of look like shark teeth, where they have, okay, this is an itemized year, a standard year, an itemized year, a standard year, itemized year, standard year. So for clients that do that a little bit more strategically, I'll actually mark that in our Wealth Box tool that will just say, yep, this is an itemized year, or this is a standard deduction year. So those are some things that we might want to just look at and model out for them as well. We get to this step here, which is actually conducting the meeting. So everything so far has been up to this point. And then once we do that, I like to just make a note. I haven't actually done anything with these notes yet, but I have a tag on notes for a win. And I like to just put down the wins there. So, hey, we helped reduce surprises for this client. They went from this situation where they described it as being like stung, and it's still stung for them 6 months later. And we helped alleviate that, and they were relieved and happy at the end of the meeting. I like to note those things. One, just for us to remember kind of the good work that we do for our clients, but also if you're going in and doing anything that projects tax savings, hey, we save them this amount of taxes this year or over their lifetime. There's ways to quantify that. We'll get into future sessions as well. And I like to note that. So being able to then show our impact inside of our tools and inside of our notes to remind us of what we're doing for them and remind the clients what we're doing for them too. So if we're projecting, so if you're in the scenario analysis and you're showing that they have a large refund coming or a large tax bill due next year, maybe, then we're wanting to then look at what are some opportunities maybe to handle that. So we'll play in the scenario analysis there. We do meeting follow-up. We task the client with their action items. We email the CPA. You're going to hear a lot more about this in the fourth session. And in the fourth session too, staging the tax letter in Holistiplan, getting ready for the next year. And then we just like to keep track of when our last meeting was with each client. So we just update that at our system, so that I like to just run a report, which clients have I not talked to in a long time? And it just allows me to say, yep, we just did a meeting for them. Okay, so are there any templates of letter to let clients know that we're providing this service? Oh, that's a good question. My instinct there, I don't have that specifically, where if you're saying, I'm going to start doing this process for clients, I want to explain to them that I'm doing this process. I would develop your AI bot and type that prompt in there and kind of get some language around that. But ultimately, I think that where you'd want to start really is conversationally with, what comes out of this process and what are we going to do together? So what we want to do for you is to help you maybe proactively plan for tax moves that we might want to make before year end. Love to gather some fresh information from you and take you through this process. And we'll go into a meeting where I'll help you understand what your tax year looks like this year, understand what the possible opportunities are for you specifically before year end, and then give you some action items to implement for that process. So that will allow you to, over time, save money on taxes, understand your taxes, and take advantage of some proactive opportunities that we might have together. So those are some things that you can throw into a template to help explain it. If it's in a letter to clients or your newsletter to your clients, to say, this is how this process works. And maybe you go through 1 or 2 or 3 with clients, maybe some sample clients, easy clients, ones without quirks, and then write it up after that to say, here's a case of clients that went through this process with me and some of the generic anonymized results from that. So I love putting client stories into our newsletter and my LinkedIn content to be able to say, here's how they came to me, here's what we did, here was the result. And that could be a prompt to say, hey, I'd love to go through this process with you as well. And this is the information I would need in order to walk through this process with you. And then here's my calendar link to get that meeting scheduled. So I always like to have the meeting scheduled typically before going through the process. You'll see that that's my first step here on the workflow, is to get the meeting scheduled. Once it's scheduled, then we gather the information, get everything prepared and ready. My calendar books in a way where meetings are booked 2 weeks out. So we always have that time to prep and kind of get that ready. Okay. Let's see. Thoughts on Holistiplan versus Right Capital's new tax module. They're completely different things. So Right Capital is the tool that I use directionally to find out longer term strategies that will work for my clients. But the near term kind of current year stuff is not editable. It's not workable. You have to go into Holistiplan to do that. And it's just much tighter there. And also the accuracy. I always like to think of, you've got the generalist kind of tool, the financial planning tool that you use, whether it is eMoney or Money Guide Pro or Orion or Right Capital, whatever it is, that's your generalist, right? So this is your specialist tool that you use, and it's incredibly important. It's a lot more accurate. After OBBBA was released, I think in 24 hours, Holistiplan had everything updated. So I rely on Holistiplan for accuracy and current year kind of review and interpretation of their overall tax projection. So how does your process change when working with a small business owner? So when I'm asking for year-to-date income information, I'm asking for their P&L, I'm asking for their forecasted income for the end of the year, asking for expenses or deductions that they might have. Very often they're working with some kind of a bookkeeper that is maybe keeping track of that for them. So just getting an idea of what their year is going to look like. It's the same thing though. You're asking for income inputs. In the case of W-2 employees, we're asking for year-to-date pay stub. For business owner, we're just asking for different pieces of information to get to the same kind of results. Okay. How can somebody join the advisor chat group? That one, you find different groups. This is a Facebook group for XYPN planners. It's 6,000 advisors are in there. You don't have to be part of XYPN to join the group, but it's just been a great resource to talk about technology and ideas and resources. So that's kind of one place where I see a lot of questions come up from advisors at all different stages of their career and planning processes. So I kind of pull from that a little bit too. Okay, so I want to take you into just a really quick preview of scenario analysis. So if we go out to, I'm going to kind of jump out to our household here. So when you're in a household for a client, I just have a demo client set up, but under your list of households, you'll have all of your clients listed. When you're in here, under tax, you have scenario analysis here. So you can either go under returns and see a return that you've uploaded. So I've uploaded the 2024 return for this sample client. And you can go right into scenario analysis here. So that's usually kind of how I jump in, but there's also a tab for it too, just specifically. So whenever you upload a return, so if you upload a 2024 return for a client, it will automatically create, and so this says system generated, it'll automatically create a scenario analysis for the client. When I click on this, it's going to take me into scenario analysis. This, by the way, is my very favorite tool the Holistiplan has. It's the most underrated tool that they have. I spend a lot of my time here when I'm working with clients. So this was, I think Janet had asked the question previously about how to maybe double check the data from the previous year tax return. So this is where when you go down here, the scenario 1 is going to be imported from the tax return, from the prior year tax return. So this is your 2024 data. So when you go in here, you can expand. There's a lot of plus signs here. So what was pulled in from 2024, what tax year, what was their filing status, number of dependents, income information. So all of this was pulled in from the return itself. So you can really dig in. So Janet, this might be where you check that for them. So what did they maybe input for? Maybe their subsidy on their healthcare or HSA contribution they made outside of payroll. You know, what are some of the above the line deductions or itemized deductions? So if this actually came in itemized, this was standard, you would be able to see mortgage interest on the return, some of the other information that's on the schedule. Other deductions if appropriate, like QBI, commonly comes up for self-employed individuals. Non-refundable tax credits, so you'll be able to see, like, they have a couple of children that fall into this dependent care credit. Other credits would be in here as well if applicable. There's an AMT section as well. So I work with a lot of clients that have equity compensation. My client base is a lot of clients in their 30s, 40s, 50s who have RSUs or ISOs. So we're looking at AMT, other taxes. So we're going to take a look at if they might have maybe oil and gas or farm profits, anything like that that's funky on their return. So you can get a lot out of it. So it's not exactly line by line of the tax return, Janet, to your question earlier, but it allows you to see a lot. Just kind of, if you can't find something, just keep hitting the plus sign. And one of the other things is I love how it pulls right into the different phase outs for different credits, and then the groupings. So when you're taking a look at whether or not they might have an issue with IRMA. We're looking at this modified adjusted gross income group 6 definition, because MAGI is different for different types of considerations. And so for Medicare specifically, I like to look at this guy here to see where their AGI is for that purpose, for that calculation purpose, and then what their additional premium might be if they're Medicare age. These guys aren't. And then their withholding calculators. So taking a look at their withholding that came off of their return. What we're going to do in the next couple of sessions is add some additional scenarios. So this is part of the staging or mise en place, getting ready, is we want to copy over those scenarios from that prior year. So this is the very first step that we do in here is we import that return. We're going to then now have a copy, an editable copy. So we're going to go in here and we're going to rename our copy. So 2025 draft or projection, whatever we want to call it. If I'm going to add additional scenarios, you'll see in the future presentations too, I'm going to make another copy and maybe say scenario 2 is 2025 if we make no changes. Scenario 3 could be 2025 with some proposed changes. So usually I like to kind of show them, hey, if you do nothing before year end, here's what this year looks like. But in scenario 3, this is where we might do the Roth conversion, the charitable contribution, additional withholding from payroll, max out your 401k, some of those things that we might want to model. So we want to kind of flip these over into the next year. So you want your 2024 to be 2025, current law, and then any other changes, you kind of want to start to stage that out a little bit. But I've got a lot of client examples. So we're going to really kind of, this is where we're going to cook. In our upcoming sessions is some examples, and we're going to spend almost all of our time next session in scenario analysis here and just take a look at how do we edit and think about these prompts in here. So we're copying over the prior year. How do we get 2025 tuned up to be what the 2025 looks like? And then how do we then create that third scenario? We're going to look at our little recipe cards here to help us see some of the different things we might want to model or think about. So it'll help kind of walk us through some different ideas. And we're going to just kind of then compare. So how do we then use this tool to inform that meeting? And in the meeting with the client, I get this all staged up and ready is to the best of my knowledge. And then I like to double check it. So in that meeting, I'm going to go through with the client and say, hey, let's go down the line. So this came in from your 2024 return. Here's what I put in for 2025 based on the data you shot over to us. Let's check it. So that's a really important part of that process as well. So got a couple more slides here I'm going to hit real quick. And we're going to wrap up. So we want to, we already have that in our workflow. We're good. So I've got a couple templates back here. So we've got an email, so client data request template and CPA authorization letter template as well. So this is the time of year that I like to kind of set the stage for that CPA relationship, get ready to communicate with them. So I have this in my slide deck. Again, you have the copies of that as well. So last thing I want to just do is show you again here. So we have a couple of additional parts coming up. You'll see some emails come out with the registration links for part 2, part 3, part 4. Those are going to wrap up over the next couple of months. So we're going to spend a lot of time together in these different tools. Also, you might not know this, but there is a fantastic support center through Holistiplan. So if you're getting into scenario analysis and saying, how do I actually get this in here? Or can you help me? If you're a Premier member, you have the ability to have a chat with somebody from Holistiplan and help them support you through that. So webinars are a great way to kind of generically learn some things. If you get stuck, there's a great support system behind the software as well. I'm going to answer a couple more questions here, but if there's anything I don't get to, I'm going to send it in the follow-up email as well. So I usually try to hit some of that Q&A there too. XY planning site she referenced. It's just a Facebook group. So if you go to Facebook and look at XY, I think VIP planning, you can find that group. And it's really just 6,000 advisors that just chat about all different types of topics. It's searchable in there too. So I think it's really important, especially working virtually with a small team, to have some community around. And that's just kind of one place that I've had a good chat. There's also the AGC, so Advisors Growing as a Community. There's also school, SKOOL, groups that I'm in as well. So there's one specifically about fintech. So if I'm asking about new technology tools, Joe Moss runs that group. I'm part of that one too. So I just try to join some of these different groups. There's the NAPFA board and the FPA board where you can submit questions, and there are people who are active on there answering questions. So whatever is the easiest channel for you to kind of get some community around you, or maybe get into a mastermind group or a text chat group, just being able to think through and talk through your processes, I think is really important. And I found a lot of value in that. Even now, just kind of understanding what some of the ideas people have or challenges they have, and how we can help support each other through them. So, all right, I'll do one more question here. Let me pick one randomly. So how do clients pay for this service? For us, it's part of the AUM fee. So we just choose to charge against assets under management. That's our current model. I do know that there are advisors who do subscription planning that will then have different levels and different tiers. I've just decided not to have all of these different client levels and tiers. I kind of have one type of client. I do everything for all of them. That's a personal preference that I have, is that I don't want to be in a meeting and just say, oh, I could help you with this, but you don't pay me enough, or you're not in that service tier. So I'd rather just be in a meeting with a client and just be as helpful as I possibly can and do everything for all of them. So we've set a minimum client size to a level that supports us taking them through this entire process. But I have had clients who have, or I had advisor friends who have said, okay, I'm going to have either a white labeled tax prep or a white label or tax prep with a CPA potentially, and I'm going to do this as a wraparound to that. I'm going to charge separately for it. So I've seen advisors charge, $1,500, $2,000 for helping kind of get all of this put together, including all of these steps and processes. So if you're subscription basis, that might be one of the opportunities. But we personally don't charge in that way or charge extra for this process that I took you through today. All right, I think I'm done, Alana.
All right. Thank you so much, Emily. Thank you so much for sharing your time and your expertise with us. I always learn so much from you. Thank you everyone for joining us today. If you're here, so you registered for this session, we are going to automatically enroll you in the remaining sessions for this series. So you don't have to worry about registering. If you can't attend live, if you're registered, you will get the recording and any deliverables sent to your inbox. So no worries if you can't attend live, you will still get all of these materials. Thank you so much for spending the afternoon with us. We will see you guys next week for part two. Bye, everyone.